Hi, I'm Rich with Tax TV, here to tell you about the payroll tax filing requirements of a business owner. We'll review the business owner's federal payroll tax responsibilities and the state payroll tax requirements for a California business. Keep in mind that some payroll taxes will vary depending on what state you're in. For specific state payroll tax information, check out our Payroll Tax Center at taxtv.com. So here we go. There are two types of returns that a business owner must file relating to payroll tax. The first return is called quarterlies. As the name indicates, they're required to be filed 4 times a year at the end of each calendar quarter. The second type of return is an annual return that's required to be filed at the end of each fiscal year. The quarterly return is filed on IRS Form 941. It reconciles all of an employer's 941 deposits made during that quarter. Every time an employer runs payroll, it's a requirement to submit the 941 payroll tax. And at the end of each quarter, the employer must file the tax return on Form 941 covering all the payroll taxes paid that quarter. On the second page of the return, you need to write down the total amount and date that you made a 941 payment. The government will review the return to ensure that all the taxes were received in the amount and on the date you stated. Uncle Sam uses a computer system to check the 941 returns. You need to make sure the return matches what you've actually paid, since the computer will pick up on any discrepancies. You may be subjected to penalties if the actual taxes paid are less than what's indicated on the return. If, for example, you listed a payment of $100 on a certain day and the IRS only received $90, the computer will kick it out and hit you with a penalty and interest. Next, in the state of California, each quarter you must submit a DE-9 and a DE-9C. The DE-9 is the quarterly contribution return and report of wages. The DE-9C is the continuation component. The DE-9 reconciles wages reported and taxes paid for the quarter. The DE-9C lists all of your employees, their Social Security numbers, and the wages they earned for the quarter. This return gives the state valuable information regarding where employees are working and how much money they're making. The state then uses this information to issue things like garnishments, friend of the court, or bankruptcy notices. The return also helps track fraudulent unemployment claims. These returns are due at the same time you pay your state unemployment and employment training tax and considered delinquent if not filed on that day. Penalties are assessed for both late submission and missing employee information. If you don't have any wages in the quarter but have made payments in the past, you must still file both returns listing 0 wages. The final step, an employer's annual payroll tax returns. The federal annual returns are the W-3, the W-2s, and/or 1099s, and the 940. Your W-3 is a cover sheet to your W-2s. It lists your business name, tax ID number, the type of employer you are, and the amount of federal and state taxes you withheld for the year. Your W-2s are what you give to your employees so that they can file their personal income tax return. You must prepare 4 copies of W-2s. 1 copy of the W-2 must be submitted to the state, 1 to the federal government, 1 for yourself, and the 4th is delivered to your employee by the last business day of January in the following year. IRS Form 940 is the form to use in preparing an employer's annual federal unemployment return. The 940 is similar to the state Form 941 in that it reconciles all of your federal unemployment payments which were paid quarterly. Therefore, Form 940 is only due at the end of the year, reconciling the 4 payments that you made throughout the year. Form 940 is due on the last day of January for the previous year. For more information about payroll taxes, check out taxtv.com.